point out that their queries haven't been answered in a few days. Unfortunately, we get a lot of queries, so chances are that we miss a few. Having said that, we do endeavor to take as many of them as possible. Unfortunately, we cannot have a 1-hour query segment. The fact is that we are the only channel that addresses queries live the way that we do, and we will continue to try and address as many of them as possible. Just a note to our experts, do keep your answers as short as possible so that we can accommodate as many queries as possible. The first one comes in from a viewer from Thiruvananthapuram. We've got Krishnan, who's asking about Granules India. He's got 400 shares at levels of 332, and he's looking to find out what the prospects are in the medium term, near to medium term. Kunal, I'm coming to you on the charts. How does it look?
So Alex, if I look at the overall formation of granules on the chart right from say the beginning of 2021 so far, the chart is in clear curve formation, and the counter has just taken perfect support on the support line itself, which is at 320. So I'm very optimistic about this counter. You can definitely think of adding more. Our viewer, if at all is comfortable, can think of adding little more. Stop loss is going to be 320 decisive level, and the upper side level can be say 389 to 390 to watch out for, and that target can be expected in say 1.5 month time.
Okay, this one is coming in from Austin, or rather Stephen Austin from Saudi Arabia. He's a long-term investor. He has 14 shares of Bosch, which he's bought at 13,035 since December 2020. He wants a fundamental view on Bosch, and he wants to know, does it make sense to add a Bosch at current levels? What's your take, Ashish? How does Bosch look? Stephen is holding it since December 2020. Makes sense to add some more at current levels?
Yeah, at 14,000 rupees, which is current Bosch price, I don't think so that any challenge is there to buy if we have bought the stock at higher rate also, because if I see from 52-week high, it is 1,000 rupees lower. Besides this, Bosch is an integral part for all automobile manufacturers, because they are the ones who make spark plugs and plenty of other products. So their sales growth is directly correlated to all auto companies. And the way we have seen boom in automobile sector, I think Bosch will be again a blue chip company to own in the portfolio. And next 1.5 year, if you can hold on, my minimum target is this stock will be 18,000 rupees.
Wow, okay, that's a significant upside. I'm coming back to you, Ashish, on Happiest Mind. We've got Pramod from Pune, who's holding at an average price of 536. He's got 400 shares, and he's wondering whether he should consider this as a long-term investment, considering that he believes that the business for the company is just taking off now.
Yes, I agree. It is a pretty good long-term investment. First of all, very good and quality management is there of this company, where a lot of investor confidence is there that this company will continue to grow. And another fact that we should look at is they are very prominent player in the digital side, and this is the company purely working on digital. So this is not the company which is just providing software services or support and maintenance, but the next level migration for every company they are working on. So this is a company can be another blue chip in making, in my view, next 3 to 5 years. But if you are having 3 to 5 years, you are going to multiply your return like 2x or 3x also possible here. So my suggestion will be to accumulate the stock at any point of time. In fact, you can do a SIP kind of investment also in Happiest Mind.
Okay, this one is from Jayant. He is holding RBL Bank shares bought at 270 rupees per share. Can I buy some more at current market price to average it out? What's your take, Kunal? What should Jayant do? Make sense to buy some more shares at current market price of RBL Bank to average his buying?
Morning, Cheryl. Yeah. So, if I look at the formation right from November till now, the counter is definitely making lower top, lower bottoms, and the trend is definitely negative. But in this negative entire trend, The positive factor is that it's making a falling wedge formation, and under that falling wedge formation, the support is coming at around 160. Recently, counter made the bottom at around 157, and it has given a very good decisive reversal sign. So yes, definitely one can add on this level. Keep the stop loss of 155 in mind, and exit the newly added quantity at say around 200 levels. The day this counter goes about 210, 215, I think 260 is on cards, but that's going to be a little positional. For time being, stop loss of 155, target of 200.
All right, Ashish, interesting question coming in from Suresh Kumar from Hyderabad. He's asking about Tata Steel versus Tata Steel BSL. Which one would you pick? The play is slightly different for Tata Steel BSL, isn't it?
Yes, in my view, both stock move in tandem. Whenever there's momentum in Tata Steel BSL also moves in similar direction. And over a period of time, as merger is planned between Tata BSL and Tata Steel, so both will have same direction of movement. But if you want to buy something in the so from the perspective of Tata Steel is a large cap and Tata Steel BSL is a mid cap. So you have to take call in that context. But in my view, you can invest in Tata Steel BSL, and in my view, this will continue to do well because the kind of product portfolio Tata Steel BSL is having and the kind of margins they have improved in the last couple of years. In my view, but this will be a good bet as far as the returns are concerned. So Tata Steel BSL you can take for delivery for next 1 year. You can minimum expect 25-30% kind of upside even from here.
Okay, the next query is coming from Soumitra, and he's saying he wants a view on Glenmark Life Sciences, fundamental view, whether it can be looked at for additions at current levels as it is well below its IPO price now. What's your take, Ashish? Glenmark Life Sciences, recently listed counter, does it make sense for Soumitra to add some more to his portfolio?
Yeah, even my previous interaction at your channel at that time also I had mentioned that this is the stock that you should not add in your portfolio and you should try to exit from this particular stock because the valuation at which the stock issue came, it was quite high. So and still we are not finding any buyers in this particular stock. So my suggestion will be to exit from this stock. And one idea which I'll give in my high risk, high return idea, which is in similar price range, just wait for that call. There you will make very good return in short to medium run.
All right. Kunal, the next one is on Fortis Healthcare. We've got Mahesh Singh who's asking about the counter. He's bought in at levels of 292 and it's had a good run over the last month if I can look at it, about 12% higher. But he's gotten at slightly elevated levels. What do you think he should do? What are the immediate targets that he should look at?
True, Alex. We saw a massive rally in the Fortis Healthcare, and the counter rallied from almost 225 to around 300 mark, and now it's cooling off a bit. So yes, it's too early for us to set the target because the confirmed bottom is still not made in this entire rally. So for time being, it's a wait and watch scenario. Two levels to watch out for. The first is gonna be 268, and then the second is gonna be 255. So watch out for these two levels. By any chance the counter holds on to those levels and consolidates, then I think the doors are open till 325 to 330. But otherwise, this sideways consolidation may be on cards from here on. So for time being, there is no momentum. I would avoid this counter.
This query is from Sukanya and she is a senior citizen and she's saying that she's holding 100 shares of Bodal Chemicals which she's purchased at 182 rupees per share. She's a long-term investor. She wants to know whether she should continue to hold on to this counter, sell or average. Ashish, do you track Bodal Chemicals? What's your view on it and also what should Sukanya do?
This is one of the most underperformer stock in this particular space. If you see the way other chemical stocks and caustic soda based stock have done, Bodal has shared disappointment. They recently bought this from Tata Chemical, some divisions also at 150 crores, but still results are not showing up. So my suggestion will be to exit from Bodal Chemical and look at Make Money Organics, which has come out after recent demerger. and it can give you better returns going forward. So my suggestion would be to exit from both.
All right, let's talk about Ratan India then. We're talking about Ratan India Enterprises. This is Manideep asking a question. He's got 2,000 shares bought at levels of 54. Kunal, coming to you on this one, if you can look at the charts and tell us what the prospects are. He's looking at both a slightly longer term as well as a short term view.
So, Alex, coming on this counter, Ratan India Enterprise, I mean, if you look at the behavior of this counter from 6th April, it was clearly in upper circuit and it went up from almost 4.5 rupee to 68 rupees. And from now 68, it's cooling off and it's now consolidating near to the zone of 44 to 46. Honestly speaking, technicals don't work on such counters. Reason being, there is no active participation and there is lack of volume also. But broadly speaking, I can say that the counter is making a base near to 43 to 47 zone kind of. That's the support zone. Watch out for this zone. Below 42, I think the exit also will be very difficult on this counter because this is either into an upper circuit or into lower circuit. So keep that 42 zone in mind and place your trades accordingly.
Today as well, and I will take it today. And he's saying that what should I do with NMDC and SAIL? He's holding 125 shares of each. For NMDC, purchased at 171 rupees and SAIL at 122. What should he do now? He can hold for the longer term. Also suggest if it's advisable to average. Ashish, either NMDC or SAIL, one of them. What should Manohar do with his holding in these counters?
So, these are again two stocks where a lot of retail traders have got stuck up at highs because people don't buy when these stocks are at 50-week low, but people tend to enter, or traders tend to enter when these stocks are going up. Again, the issue is in these both stocks, as the steel prices and particularly from the China side, commodity prices are quite volatile. So this is the reason number one where investors are again not looking at it. Second, the problem is that domestic demand offtake has slightly become slowed in both hot rolled steel and cold rolled steel both because the prices are very high. So traders are also waiting for prices to cool down. So my suggestion will be like to wait for some averaging both these stocks, and from here, if these stocks correct 5 to 7% more, then you can think of averaging. But don't wait till your purchase price comes. Try to exit at your average price. Maybe it will come in next 3-4 months.
Okay, we've got a question coming in from a senior citizen. I can't find the name, but he points out that he's a retired colonel. Thank you so much, sir, for writing in. He's got Infosys at levels, I believe, of 1,650, and he's wondering whether he should reduce risk by shifting half of his holding to another large cap IT counter. I'm going to come back to you, Ashish, on this, assuming that he's holding for the long term. What should the retired colonel do?
If you are having a long-term investment and the horizon is also long-term, then in the stocks like TCS, Infosys, Wipro, they are always the best buy because they will gradually will give you better returns over your fixed deposit or debt mutual fund. At the same time, you get good dividends, etc. too. So my suggestion will be not to exit from Infosys. In fact, Infosys and TCS both can be bought at this price, and it will give you certainly good returns in next 1 to 3 years. Because the way IT sector is into demand, large cap stock will continuously do well on.
Okay, this one is from Kunal Kaushik. He is talking about KPIT Tech. He has 200 KPIT Tech shares, which he's purchased at 282 rupees per share. He wants to know that what should he do with this particular counter. Kunal, what's your take on KPIT Tech?
So Cheryl, right from the bottom of April and May 2020, almost all tech counters have given a very steady rally, and KPIT Technology is not an exception to that. Recently, it's been a bit volatile. Reason being, they are trading at very higher levels compared to a year for itself. So yes, momentum is gonna be little bumpy from here onwards, but the trend is still on. If at all you have a bit of positional view, keep the stop loss of around 310 and let the counter continue in the direction. I think once the counter crosses 348, 350 mark, the previous rally, which is an uptrend, will definitely continue, will resume. But if at all it goes below 310, book out your profits and exit. Otherwise, a trending counter, not much of a worry as of now.
Gentlemen, we'll try and slip in as many as we possibly can over the next 2 minutes, and then we'll have to hit the rapid fire round. The next one is from Tippe Swami, who is a retired employee he's retired and he's living in Bengaluru. Ashish, he's asking about Coal India, which he's bought at very elevated levels. Should he exit or should he hold on? He's a long-term investor.
Actually, I never like this stock, Coal India, NTPC, etc., because they are typically a commodity play. And when stock is just when these stocks are bought looking at the value, etc., they'll never give you a kind of return. So my suggestion will be not to buy Coal India at all. Coal India, NTPC, ONGCs are a stock to avoid instead of this stocks in pharma or chemical, etc. I think they will continue to give you better returns. So avoid Coal India.
Okay, this query is coming in from Prasad from Abu Dhabi. He's saying that he's holding Coal India at 255 rupees per share. What's a future prospect of this company? Ashish, how does Coal India look? What should Prasad do?
So as I mentioned, Coal India is again a stock which I don't like at all. In fact, instead of this, I'll give a couple of new ideas and so high risk, high return and low risk, low return. You can select any one of that. Coal India is avoid.
Okay, very quickly, one more question. This is from Sudhakar from Guntur, and he's asking about future retail. Ashish, he's losing value. He's bought at levels of 102. Would you suggest that he exit at the earliest opportunity?
Yeah, you should exit at earliest opportunity because nothing concrete is happening in this stock per se, and the way other retail players are grabbing the market share, future retail is not going anywhere. So my suggestion will be to exit from this stock. And again, a couple of alternatives that you can look at is RPSG Venture or Avenue Supermart, that is DMart. There at least you will able to fetch some return in short to medium term.
All right, time for the rapid fire then. We are done with the query Q&A. Also, Kunal and Ashish, if you're familiar with this particular concept, we throw the queries at you and you need to give your answers really short. Buy, sell, hold or avoid or small rationale if you please to do so. Let me start with this one. This one is coming in from Shanmuga Sundaram. AstraZeneca 60 shares which is purchased at 3,750 rupees per share. He wants to know what should he do with this. Can he continue to hold on to it, Ashish?
Yeah, in my view, you can continue to hold on.
Okay, coming back to you, Ashish, significant holding. Noel Pereira has got 30,000 shares of L&T Finance. Should he hold for the long term?
No, I suggest to exit from this stock and swap it with Mahindra and Mahindra Financial, which can give you better return.
This one is from Aravit. He has Ujjivan Small Finance Bank, bought at 35 rupees per share. He is in a loss right now, so he wants to know what should he do, average, hold or sell.
Cheryl, if this question is for me, it's a clear exit.
Okay, coming back to you, Kunal. Vedanta is the counter. It's seen a bit of a pop today, but we've got Rajajoti who's bought at 285 levels. Should he hold on?
Absolutely clear hold with the stop loss of 295, target 340 plus.
Okay, this one is coming in from Madhusudan Desai. He has 115 shares of Lakshmi Organics. He bought at the time of IPO. He wants to know whether he can continue to hold on to it and re-enter the stock at a later given point. Kunal, what's your take on Lakshmi Organics?
Today's formation is doji. A mild decline is possible, so I would suggest to take a small profit and re-enter near to 425 zone.
Kunal, Reliance Industries, Seth wants to know, he's bought at a level of 2,110. Should he hold on? Is there significant upside in the near term possible?
Yes, today it's showing a very good comeback and the previous resistance is taken out as of now. So maintain the stop loss of 2250 and hold on. I think the target can be 2330 to 2340.
Alright, with that we come to the end of the rapid fire. And yes, Kunal, that query was for you. I missed taking your name in that one. But on the note, thank you Kunal as well as Ashish for joining us on the show, giving us a take on the tractor makers as well as resolving all the viewer queries. And on that note, we'll slip into a break in this edition of Buy Now Sell Now. But stay tuned, more on the other side, so don't go anywhere.